All right, so you just take your seat while Laddie comes to take us to the global space. Laddie.
Right. Yeah, it's more gloomy forecast, just like the one Halimia just gave. Right now, we have some data out from the OECD, and definitely it's all about the growth of the global economy.
Yeah,
At this point,
unfortunately, we saw
we're
that.
seeing a slowing coming. That's what the OECD.
This is President Trump's fault.
Exactly, and
Yeah,
so
he
on the back of
started all of
tariffs.
this.
Exactly. So, we're going to be analyzing all of that. We see the global economy is on course for its slowest expansion since the pandemic, with the OECD downgrading its growth forecast amid mounting trade tensions. And we're seeing notably from former U.S. President Donald Trump's policies. In its latest outlook published today, the Organization for Economic Cooperation and Development cut its projections for global output, and for most G20 economies, it emphasized that easing trade restrictions will be essential to revitalizing investment and containing inflationary pressures. The OECD now expects global growth to slow to 2.9% in both 2025 and 2026, marking the first time since the 2020 COVID slump that the pace falls below 3%. The U.S. economy forecasts to decelerate sharply from 2.8% in 2024 to 1.6% in 2025 and 1.5% in 2026. Persistent inflation is also likely to delay interest rate cuts by the Federal Reserve. That's a warning coming from the OECD. And we see palm oil prices surge to the highest level in nearly 3 weeks, driven by expectations of stronger demand after India, the world's top importer, reduced import duties on edible oils. Futures in Kuala Lumpur jumped as much as 2.6% today, following India's announcement last Friday of a duty cut on palm and sunflower oils aimed at easing retail prices. Markets in Malaysia were closed yesterday due to a public holiday. The revised import duties come into effect May 31st. Additional support for palm oil prices comes from firmer crude oil markets, boosting palm's appeal as a biofuel feedstock and increased Malaysian export volumes, and that's according to analysts. Then we see European aerospace company Airbus delivered approximately 51 aircrafts in May, down 4% from the same month in 2023. According to industry sources, their total deliveries for the year now stand at around 243 aircraft, 5% lower than the same period last year. The company has not commented ahead of its official update expected on June 5th. As delivery delays continue to frustrate airlines, Airbus remains under pressure to meet its full-year target of 820 aircraft, which would represent a 7% increase from 2023. And vehicle sales in Turkey rose 7.4% year-on-year in May, reaching 107,000 units. That's according to Automotive Distributors and Mobility Association. Passenger car sales increased by 6.1% to 85,000 units, while light commercial vehicle sales jumped 12.8% to 22,607 units. For the January to May period, total vehicle sales were up 3.7% year-on-year, with 489,000 units sold across both categories. And we see Bitcoin rose slightly today, recouping some of its weekend losses, although crypto markets remain range-bound amid heightened uncertainty over U.S. trade tariffs and their economic impact. The world's largest cryptocurrency has fallen as low as $103,000 over the weekend as it faced extended profit-taking after a push to record highs of nearly $112,000 in early May. And China's manufacturing sector unexpectedly contracted in May, with the Caixin manufacturing PMI falling to 48.3 points, below the expected 50.8 and down from 50.4 in April. This marks the first contraction in 19 months, driven largely by weakening overseas demand amid rising U.S. trade tariffs. The data aligns with recent official figures showing a second consecutive month of shrinking factory activity, highlighting ongoing challenges for China's export-reliant economy. So that's the picture right there in the global economy. We're seeing all of that data rolling out, and the latest one there from the OECD, it's a gloomy forecast. Earlier I spoke with Anieta, and he says they're used to having bringing out gloomy forecasts, for
Well, they
the
deal with
economy.
data. I
Yes,
mean, it's
exactly.
not from their mind.
It's
I believe
data-driven,
it's
at this
data.
point.
And we saw it's evident there in China, the second biggest economy in the world. We see them shrinking because obviously demand and the tariff and all
Exactly.
of that is feeding into every economy. And so I guess that's what the OECD.
Exactly.
It's
So
not
I guess
just the OECD that is giving
you don't
us
need a prophet to tell you at this point, going by what we're seeing,
Exactly.
play out so far.
Yeah. All right, Laddie, thank you so much. We'll see you at 1 p.m.
Thank you.
And just before we go, I'll tell you about the market yesterday. We hit a new high yesterday. It was a good one for the Nigerian Stock Exchange, and investors really happy. Did you take some profits? You are one of those who will bring the market down today. But anyway, the all share index hit 112,015.95. It gained 0.25%. There you have it. Equities cap is now on the 17 trillion naira level activity, and it was mostly MTN that drove the market up yesterday. I know their 5G invention is gaining ground, seems to be gaining a lot of confidence, and I guess that is why investors are still very much interested in MTN Nigeria. So we saw them move the market yesterday because most of the sectors were down. I think it was just oil and gas that stayed in the positive yesterday. But let's see what the market will hold today. Most likely profit taking will come in and give us some red color. But it's a good thing that the NGX is flying and hitting new levels, and we hope it stays that way. I'm Ini John Mekwa, wishing you the best of the rest of the day. I'll see you tomorrow. God's grace.